Deutsche Bank calls for a bottom, or at least a range of a bottom, and COMEX Death Watch update, as implied by Deutsche Bank.
Welcome to this morning's Markets and Metals with Vince Lanci, where each morning he brings you the precious metals news to get you ready for your day. Now, here's Vince.
Good morning, I'm Vince Lanci. It's 7:55, and this is the GoldFix Market Rundown. Friday, well, there's the home page, right? This is what we're going to talk about. Deutsche Bank calls for a bottom, or at least a range of a bottom, and COMEX Death Watch update, as implied by Deutsche Bank. Also, Friday, keep this in mind as I go through the markets. Friday, Moody's downgraded U.S. debt. Although it was known that this was going to happen at some point, the timing is fortuitous if you're bearish on the U.S. Came out on Friday after the close, and on the surface of it, that's bearish for bonds, bearish for the dollar, stocks, depends on how you look at it, and bullish for gold. And we're going to see that the markets are reacting that way. Kind of a muted version of what happened in 2011 when gold was up 3% and stocks were down a ton. I forget how much, like 5 or 6%. So let's go through the markets. 10-year yields are 454, up 10 basis points. The 30-year is trading at 5%. Everyone will talk about that today. You heard it here first, maybe. The dollar is 100.21, down 76, so consistent with the news. The S&P 500 is 58.97, down 32. The VIX is 19.37, up 2. So volatility increases. That makes sense. Gold 32.45, up 41. Actually surprising for me. It opened up 40 last night and then backed off $20. And I said, short covering rally, we're done. But maybe we're not. We'll talk about that in a minute. Silver 32.59, up 31 cents, 32 cents, still being sold so people can buy gold. Copper 4.59, up over 1%, up more than silver, right? WTI 61.84, down 62. Natural gas 3.16, down 11. That's a lot. I have to look into that. Bitcoin 102.950, down 3,500. Spiked up 3,500 early part of the weekend. Really nice run up, and now who knows? Maybe if it's bearish for bonds, it's bearish for Bitcoin, especially if Tether's involved. Palladium 962, up 2 and change. Platinum 996, up 8. Almost in backwardation now, I think, for platinum. Keep that in mind if you're a platinum person. Gold, silver hovering at 99.50. That's the new home, it seems. Soybeans 10.45, up 4, between 4 and 5. Corn 4.41, up 4, and wheat up over 5 cents at 5.34. Okay, so there you go. Back to the homepage. These are the stories we put out over the weekend and this morning. Front and center, HeartNet leaping from 1976 to 1991. Right-hand side, top right-hand side, Deutsche Bank calls for a gold bottom. We just sent that out. Founders had that report late last week. Goldman bought the dip. That's a podcast explaining why we were so confident that Goldman, in fact, bought the dip, because they, in fact, bought the dip. They're long options. We go through that. Lower left-hand side, a quick addendum. We sent out to founders this morning, and founders read please about me saying there's not going to be a Sunday founders discussion. So here we go. Deutsche Bank calls for a gold bottom. With expectations for severe trade disruption easing and dollar weakness temporarily arrested, gold has moved closer to its fair value range, according to Deutsche Bank. The thing is, in the past, the fair value range would have been between 27 and 2,800. But according to their new model, it's closer to 3,000 to 3,200. So let's read a quote from that. We think support for the market is closer at hand and arguably in a zone between 3,000 and 3,200. To substantiate this, we reference the hybrid model we explored in early April. This posits that the post-22 elevated pace of official demand, around 500 tons above the 2011-2021 range, is likely to continue for some time. And there's the article, and there's a picture of that's a picture of Chinese demand. This report echoes vindication moment. This point echoes the Goldman Sachs, Bank of America, and JPM's new models for gold valuation, emphasizing physical demand at the expense of speculative demand. That was quantified at those banks when they launched their new models late last year, but publicly pioneered a gold fix long before they shared their models publicly. So we would just say it's not only a vindication, but it's actually a nice compliment. Moving on. We have that whole analysis and report and an extended commentary on it in Deutsche Bank calls for a bottom. COMEX Death Watch update. The bank also notes, here's a quote, one surprising piece of market context is the CFTC gold net long positioning has continued to pull back throughout the rally, an unusual pattern which has gone further than we expected. Again, that's another piece of the puzzle discussed here. It's a newer piece. COMEX Death Watch, that was a very popular podcast that we did on that, describing the situation. And the mechanics of it are this. As American hedge funds are booking profits, selling it, getting out, and bullion banks were covering shorts into the rally, getting out of their shorts, nobody was coming back. So all the buying was coming into China. Now, obviously, you can make the case that that buying is different. It's not, buying is what I'm trying to get at here, right? So the volumes are going there. The open interest is going there. And now the bullion banks are taking note of it. Other banks have mentioned it too, but Deutsche Bank, they have this precious blog that they do. It's actually pretty good. They're trying to reestablish themselves in gold, and they're doing a good job of it. Discussing the fact that, hey, look at that. COMEX open interest stays down. Right. And that's all part of, if you're using a new model to value, here's the bottom line for all the banks, for all the people who watch the banks. If the banks are using new models to value what price gold should be at, then the bank should also be using new exchanges, because the model has to deal with physical demand. And the physical demand is in the East, and the exchanges in the East are increasing their footprint. That's it. End of story. Continues, and Deutsche Bank calls for a gold bottom. Not saying we agree with the bottom, but we do say that their explanation is valid. Data on deck today, leading indicators. Related posts, Founders Quick Addendum, Hartnett leaping from 1976 to 1991. Goldman bought the tip. We just mentioned all those, and that's all there is to it. A quick comment on something that that happened this week, and something very pleasant I'd like to share. The Gold Fix broadcast was started during COVID, just to keep me busy, and it was started from a local tavern or bar in Stamford called Casey's. And those of you who've been with me for a long time are familiar with that, because some of my earlier broadcasts were actually from the bar. It was empty, no one was there. I'd go in, I'd get a steak, have a beer, and talk about markets with you. That was the beginning of it. Well, during that time, when I was doing that, in between that, I was on my laptop, just paying attention to what I was trying to figure out. And there were a couple guys who woke up and we'd make small talk. A lot of contractors would be there, a lot of construction guys. So it was really good to get a feel for the real economy versus the COVID bullshit. And but a couple of them were I chat with a little bit. And one of them is a guy named Bobby Boots, right? So his name is Bob, right? He's called Bobby Boots in the bar. And he's a construction guy, retired, done very well for himself. Also never made it through college like I didn't initially. Also came from an Italian-American background, and also had some obstacles to deal with. But the funny thing is, I walk into the bar this weekend for lunch, and he's there. And he looks at me and he goes, you're the gold guy. And I was like, yeah. He goes, I remember, we hadn't seen each other for like a year, right? I remember you during COVID. He would come, and this is him talking. He came up to me and he'd ask me questions about the market, He knew what he was good at. And he knew he wasn't good at. And so I would ask him questions about construction and contracting. It was a nice give and take. And he came back to me at the bar when he goes, "You're the guy that I've been watching for 8 months and didn't even know it, but it is you." And I'm like, "Yeah." And we were talking about how he was complimenting me, saying I was right about gold, and that's great. And apparently I made him or saved him a little bit of money. We talked about gold. It's not an investment. It's not something you expect to go up. It's a store of value. And we've luckily been enjoying gold increasing in price because the rest of the world is waking up to it being a store of value. So very pleasant callback to when Gold Fix first started in a bar, in a local bar. And one of the good guys, remembered. So that's fun. I like that stuff. So kudos, Bobby, and brothers from a different mother. I totally get it. All right, let's go to the markets. Let's take a look at the chart. All right, here's the dollar. I'm going to keep it simple here. Let me hide everything. Let's keep it simple. All right. Can I do my little drawing thing here? Yeah, here we go. All right, so this is the new trading range. Okay? Unless we get above the dotted line here, for me, the way I'm looking at it, unless we get above this dotted line here, that's my alert, I'm not bullish. Okay? I mean, I'm bullish, but I'm not crazy bullish, right? This, from a technician's point of view, this is a structure. We got into it, we thought about being value, and then we rejected it. The question is, will we get back up and then this whole thing will become the structure, or is this the structure? So it depends on where you draw your lines. I draw my line here, and here's why. This area here was where the bullion banks hedged gamma before. They were buyers there, and they were buying ahead of Chinese insurance demand that was here. The Chinese insurance demand, so here's your macro discretionary boys going, we're going to sell it. And the bullion banks saying, nope. And then it goes down. The bullion banks get filled on their gamma hedge and their short covering. And then it runs into the real demand and the market stops. They get crushed. It comes back down. Bullion banks buy it again in this area. Doesn't hold. Macro discretionary is hitting it hard again. And now we crack it. And now we're in between a floor of the Chinese demand, or some of the Chinese demand, and a ceiling, which is where the bullion banks were buying before. So this is the new range, okay? And the moving average comes in very nicely there. I'd like to draw your attention to these moving averages. The 50-day moving average is not a reason for China to buy. Insurance companies don't buy on moving averages. They don't buy on moving averages. They just pick a level and they buy it. Could they raise it? Yeah, they could raise it, but they don't chase markets unless they really have to. That's the first thing. The second thing is this is a 30-day moving average. And the 30-day moving average, which has mirrored these pullbacks that Jim and the rest of the founders we all discussed before, was cracked, right? So now we're below the 30-day and above the 50-day. For now, that's kind of a good guide. Below the 50-day, maybe you want to be bearish. Above the 30-day, coinciding with my level, maybe you want to say this whole structure is going to become the norm. I don't know, but that's the way it is. So you can look at it like this. There's a top, there's a bottom, these go across. This area, you could say this is where the battle is being waged. Macro discretionary is buying puts, they're selling futures. They run into a brick wall like Goldman buying in here, and the bank's buying in here, and I'm sorry, the insurance company's buying in here, and the macro discretionary goes, oh shit, and they cover. Now we're in this area. Bullish news comes out for gold, which, the Moody's thing, which can be ignored. It can be ignored. It was ignored in 23, but it wasn't ignored in 2011. So what will gold do? Ignore it or not? Well, so far it's not ignoring it. But I'm not crazy happy until it gets above that dotted line. If you want to zoom out a little bit more, you could just say this is kind of like an ascending triangle. We break this trend line, you're down. We break that flat top, you're up. That's it. Silver, Michael Oliver's got some levels out. I got to look into what they are. But he's identifying silver as, well, it's a tired momentum to the downside. That's the way to frame what he's saying. And he does have his levels, and I'll bring those up later on. I'm Vince. Have a great day. Take care, everyone.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. Sure hope it's been a nice start to your week, especially seeing the gold and silver prices a little bit higher. And we will see what the rest of the week holds in store, but appreciate you being here, and just did want to let you know that we did recently find a new gold and silver dealer who fortunately has the advantage that perhaps aside from a liquidation blowout special, he is able to beat the online dealers and just about any other precious metal dealer out there in terms of pricing. Good man too. So if you are buying or selling silver and would like just to get a quote and see if he can indeed beat that price for you that you're looking at, well, always welcome to email me at chris@arcadiaeconomics.com. Happy to help out and at least let you know what we can find out there for you, as that was one of the things that I've been wanting to do, is get something in place so that it would be a good deal for people. So there, if you ever need help, chris@arcadiaeconomics.com. Hope you're doing well out there, and we will see you again tomorrow.